it's ugly, people. Stay with me. The selling isn't stopping. We are close to the lows of the day in the last hour of trade here. Buckle up. Here's what's driving the day on Thursday, October 11th. Stock markets turn sour again as heavy losses return at the end of what has been an incredibly volatile day, the kind of day where you blink and you miss it. In the meantime, Saudi Arabia faces economic fallout in the mystery of the missing journalist. And you thought trading was tough. Try flying nonstop for 19 hours. Richard Quest is doing it right now on board the world's longest flight. I'm Paula Newton, and this is Quest Means Business. Okay, so you get the picture, right? The U.S. stocks are swinging wildly. Hang on, because this could get worse before it gets better. This is the final hour of trading that we are bringing to you here in Quest Means Business. The NASDAQ, interesting here, has just fallen into correction territory. That's a fall of 10% or more from recent highs, and that is exactly what it has done. The Dow has pulled back slightly from the lows of the day. It was down 700 points, and that was just moments ago. All sectors are down. The S&P 500 is on pace for its worst month in more than 3 years. Asia and Europe, meantime, they are not sitting this one out. They also suffered steep losses. Investors are growing anxious about those rising interest rates, that trade war, and now President Trump's verbal attacks on the Fed. From the Oval Office, the president accused the Fed's policymakers, most of whom, keep in mind, he picked out himself, of being out of control.
I think the Fed is far too stringent, and they're making a mistake, and it's not right. And it's, despite that, we're doing very well, but it's not necessary, in my opinion, and I think I know about it better than they do, believe me.
Mr. President, after what happened with the Suez capsule...
No, I'm not going to fire him. I'm just disappointed at the clip. I think it's far too fast.
And we will get more on the politics of all this in a moment. But first, we go to Allison Cossack, who is at the New York Stock Exchange. I mean, Allison, I'm having a hard time just even looking at all of the red. You're living it there on the floor. I mean, what seems to have happened? Because there has been a lot more selling just in the last hour.
There definitely has been. I mean, you're right. If you blink and look away, you're going to miss it. And in a matter of 15 minutes, I've watched just the Dow swing, literally hundreds of points, even stunning traders here, hardy traders who do this and handle this kind of thing every day. This is even shocking to them. What's changed? Really nothing. I mean, we've just entered the last hour of trading of a two-day sell-off. You know what? The situation is pretty much still the same, except the one difference, which I find interesting, the yield on the 10-year is down today, so you can't point to the bond market to blame for this second day sell-off as we see the Dow sit lower by 473 points. Really just volatile trading today. A lot of traders I talked to said, look, we expected this to come at this time because we watched the movement of the market throughout the day, and it was really trying to make up some ground, and it really couldn't stick. This is kind of what they expected, but even when it happened, they were still stunned. Paula?
Yeah, and Allison, there are some buyers in this market. They are trying to claw their way back. Is there a sense that this, though, we know that traders love volatility, right? They don't like a good, steady market. They say you can't make money in that. Right. Is there a sense that we're at a different inflection point here, that this is a game changer?
Some are saying yes, this could be an inflection point, but look, I mean, if you think about that inflection point, we're talking literally about interest rates moving higher, but that's been telegraphed for a very long time from the Fed. So many say, look, this shouldn't be a huge surprise. Secondly, a market shouldn't just go up, up, and up. It needs to go down like this. Many will say, look, this is healthy for the market. This was something that was coming, and it was a matter of time, Paula.
Yeah, a matter of time, and yet a lot of people seem to have not heeded that warning, even though it's been coming for weeks now. Allison Cossack, who will continue to watch these markets and what has been an absolutely roller coaster ride the last couple of days and the last hour of trade. Allison, thank you. Meantime, as we were just talking about the president's comments, his top economic advisor insists the Fed is independent. Extraordinary words that his economic advisor even has to say that. But over the last 24 hours, President Trump has mounted a sustained attack on the central bank, its policies, and the man he chose to run it, Chairman Jay Powell.
I think the Fed is making a mistake. They're so tight. I think the Fed has gone crazy. It's a correction that we've been waiting for a long time. But I really disagree with what the Fed is doing.
The Fed is going wild. I mean, I don't know what their problem is, but they're raising interest rates, and it's ridiculous. The Fed is going loco, and there's no reason for them to do it, and I'm not happy about it. The Federal Reserve is getting a little bit too cute, that's all. That's ridiculous what they're doing. I'm paying interest at a high rate because of our Fed, and I'd like our Fed not to be so aggressive because I think they're making a big mistake.
Blunt language there. It has been, in fact, the Fed's great experiment, right? Finding that right temperature to help the economy create jobs, but also keep those prices in check. Now, the Fed's low rates over the past decade have lit a fire under the economy. Low rates make it easy, remember, and cheap for businesses to borrow money. When they invest that money, jobs are created. More jobs means more people like you and I spending and paying for those goods and services, which in turn grows the economy. Now, if the Fed keeps rates too low for too long, what happens? The economy overheats. Businesses borrow and spend in an unsustainable way, known as a bubble, but when there are more jobs than workers, wages rise quickly. That pushes up prices. So far, inflation isn't out of control. That is key. You want to keep an eye on that inflation number. The latest numbers show consumer prices rose less than expected in September. But if the Fed raises rates too quickly, this is the other problem and the great debate out there right now, because the economy the heat could go out of the economy far too quickly, and that economy then cracks. When rates go up too high, too much, too fast, businesses borrow less and hire less. Companies that relied on easy money suffer, job growth slows or goes, in fact, in reverse. And when that happens, consumers spend less. The Fed thinks equilibrium is a few rate rises away. Big mystery there. How many do you need? Rates have gone up 8 times since the crisis, with another 3 to 4 rate hikes expected in the next year. A lot to talk about here. Joining me now is Stephen Moore. He served as an economic advisor to the Trump campaign. He's a distinguished fellow at the Heritage Foundation. And Catherine Rampal. She is an opinion columnist for the Washington Post and a contributor here at CNN. All right, we've got a lot of time here, which is a good thing because, in fact, we're going to need it. Let's get first to the Fed comments and the president. Stephen, you know I'm coming to you for this one. These comments were extraordinarily blunt, and even to say something like, no, I won't fire him, as if that would be easy or as if there's cause. You have been much more orthodox on this than the president, I want to say. I mean, are you happy the fact that he's calling out the Fed, and do you think it spooks the markets?
I don't know if I'd call my views orthodox. I tend to agree with Trump that there was no real reason for these rate hikes, and I think one of the things that's really spooked the markets is not necessarily this particular rate hike, but their announcement that rates are going to continue to go up and up and up. And I think that their benchmark for 18 months from now was like 3.7%. Well, that's well above the inflation rate. And I think that has, spooked investors. And I think it's wrong. I mean, the Fed has one job and one job only, and that is to keep inflation under control, in my opinion. And look, we've got, as you just said, inflation is under control. That was exactly spot on correct.
From what we've seen.
But I mean, it's been under control for a long time, and there's no real indication that prices are going to rise, except for the fact that you do have wage increases, and that's something we wanted.
Stephen, does that mean we're just going to throw out Fed independence here? The president is just allowed to.
The Fed is independent. That nobody is calling into question that. The question is whether it's appropriate for the president, as the chief executive of our economy, to call out the Fed when he thinks they're wrong. And I don't have a problem with that. I think they are wrong.
Catherine?
I think there are 2 issues here. One is what the Fed's doing appropriate, and reasonable people can disagree about the pace of Fed hikes, but we are into one of the longest recoveries on record. We have, as I'm sure you would love to point out, unemployment at whatever it is, 49-year lows. Inflation has been picking up a little bit. It's still not out of control, obviously. Trump just dumped $2 trillion worth of fiscal stimulus into the economy. These are exactly the conditions under which you would expect a Federal Reserve to decide to tighten gradually as they have. So that's one question, which is what the Fed is doing appropriate? And I think a lot of economists would agree, even if they might quibble with the exact pace. The second question is it appropriate for the President of the United States to jawbone the Fed? And it is absolutely not appropriate. Central bank independence is incredibly crucial to the long-term health of this economy, and the Fed has fought over decades to safeguard both its actual independence and perceptions of its independence. Part of the reason why we had inflation in the 70s that Volcker then had to tamp down is in part that presidents in the 70s were jawboning the Fed, were publicly putting pressure on the Fed. The Fed has worked very hard to make sure that people credibly believe that they are looking out for the stability of our currency, for the stability of prices. And as long as the President of the United States is making these public comments, calling them loco, that puts all of that into question.
He was bilingual. That was very good. Loco and crazy. I give the president full credit.
Gone wild, yes.
But, Stephen, it's a point to be made here. If you believe in the Fed's independence, why say anything at all unless you're just using it as a political statement? And you don't care that the market's down more than 500 points right now.
There is this view out there that somehow these people who run the Fed have some kind of oracle where they know what the answer is,
but they
and they don't.
I mean, it's about the public perception about whether there is political influence.
Is wrong. I mean, you mentioned the 1970s. Only idiots would have been doing what the Fed did in the 1970s, where they created, 15% inflation and 20% mortgage interest rates. I mean, only a moron would be in favor of that.
That's because
let me mention another example, though. We had a major financial crisis, right, in 2007 and 2008. The Fed had a major role in that by inflating the economy, zero interest rates, and it just pumped money into the housing market. I was at the Wall Street Journal for 5 years before that. We were warning month after month after month after month that they were creating a bubble.
It's interesting that you only care about inflation when Trump is not in office,
that the Fed
but not when he is in office.
The Fed is not like the Pope. They're not infallible, and they've made a lot of mistakes.
No, I don't have a problem with you criticizing the Fed. I don't have a problem with Paula criticizing the Fed. I have a problem with the President of the United States criticizing the Fed.
He runs the economy. I mean,
but you don't.
But then why have Fed independence? If you think that you interfering and you, as Catherine says, jawbone the
Fed. I think the Fed should take into account the president's view on this, right?
No, they absolutely
why
should not.
I mean, why?
Because presidents always have an incentive to play the Phillips curve, to pump a little bit more money into the economy, especially during an election year, so that you can squeeze a little bit more growth out of it, which runs the trade-off risk of having inflation down the line. That's why you want the central bank to be independent, so that they have the freedom to do unpopular things like jack up interest rates, like take the punch bowl away. And if there is a public perception out there that the president is in fact threatening the Fed behind the scenes or is screening potential Fed picks, as Kevin Warsh had who was shortlisted for the Fed chair, actually said he was screened. He said Trump was asking him elaborate questions about his views on interest rates.
Well, what's wrong with that?
Because you want the Fed to be independent.
And why have the president even pick who the head of the Fed is? Look, my point is this. The real economy is as strong as it's been in 30 years. I mean, every indication in terms of investment, employment, we're going to get 4% GDP growth for the third quarter.
And yet it's not appropriate to be tightening? Given those circumstances?
And it's the best of all worlds. We have no inflation. So my point is, and I think Trump is making this point.
So keep the punch bowl.
No, yeah, exactly.
More punch. More punch
Not more
for everyone.
punch. Don't take the punch bowl away just because the party is rolling. The biggest problem with the American economy over the last 20 years, I think you would agree with this, is that wages haven't been rising for middle-class workers. We made this the central focus of our agenda. How do we get middle-class wages up? They're finally starting to rise, and the Fed looks at that and says, oh, no, that's inflationary. How are we going to get wages?
They have said nothing close to that.
They've been looking at wages.
They look at PCE, core PCE.
And they look at wages. I know they do. I talk to Fed economists all the time. And how are we ever going to get wages up if every time we get a wage increase, they take the punch bowl away and say we can't have it?
If you have a fiscal stimulus and that's what's goosing the economy, then it is perfectly appropriate for the Fed to see itself as a
stimulus. It's an investment-led recovery. That is
not what the Fed, the CBO, the IMF, every single outside
Catherine,
independent
look around the country. Every single city from Portland, Maine to Portland, Oregon has the biggest construction boom in the history of this country.
Every single outside independent forecaster
have you looked with your two eyes at what's happening in America?
I have.
Look at the construction numbers. They're off the charts.
Would you let me finish, please? Every single outside independent forecaster, including the Fed, including the CBO, including the IMF, including the Penn Wharton budget model, every single one says that we will have a temporary boost from the tax cut, and then we will revert to our long-term trend.
Catherine's quoting the same people who didn't predict the Trump economic boom. So they got to you're citing the very people who said that Trump's policies were going to cause a recession.
I got a boom, and
I got a call.
Newspaper said that.
I got a call time for for this moment as we continue to watch the market claw back from there. I invite both of you back.
It's a good time to buy stocks right now. Stocks are really cheap now.
Now, Steven's advice.
Not according to,
Buy
not
stocks
according
now.
to
Listen,
Shiller.
we will have you guys back for this. I love these interviews where I don't have to do anything at all. I will advise, believe it or not, folks, these are the debates that Catherine and Stephen just had that are going on within the Oval Office, because I know there is a lot of debate between Treasury right now and the West Wing about what should be done about the Fed, if anything at all. Thank you both. Now, an international mystery is pitting Donald Trump against a key ally. Trump says sanctions on Saudi Arabia would not only hurt U.S. companies, would not only hurt U.S. companies, Saudi Arabia as well. Senators say the Saudi government must pay a price if it's behind a journalist's disappearance. And I told you before, Richard Quest is taking the longest flight in the world, Singapore to Newark, here in New York City.
The twin Rolls-Royce Trent XWB engines have spooled to full power, and we're now on our takeoff roll. Any second now, the A350 will nose into the air, rotate up. Here we go.